How's it going, everyone? It is Andre Williams, and today we're going to be doing an update for the 5K challenge. Also, we're going to be doing an update on APTO. If you guys remember, I did a video not too long ago talking about the two biotech stocks to buy for the month of March. And guess what? One of them ended up going up 100%. So what we're going to do in this video, we're going to be taking a look at the technical analysis for APTO and the price action that we saw that gave us that big movement. And then I'm going to be doing the account reveal for the 5K challenge, showing you guys my most recent positions. Let's get into it. All right, so we're going to be doing an update for the 5K challenge account. So as you can see right here, I ended up buying a bit more warrants, and I think in regards to warrants, I am good for now. Unless I'm going to add some more warrants for ACIC to get that up to 50, then I might consider doing that. But besides that, that is about it. I will not be buying any more. So as far as what it's looking like, so right now my average cost for the ACIC warrants right now is currently at $2, and let's just call that 25 cents. Of course, SPACs are getting beaten down, so right now the current price is at $2.02. Market value is at $70, and I'm down $7.82. FRX as well, this has been beaten down. The price currently on the Friday was $2.71. My average cost is $3.03. And Ring, you guys already know I've had that one since we've started this challenge already. So average cost is at $1.58. We could just call it that. And then the current price is at $2.48. And this is Black Sky. So this is what's going to be actually they're going to be going public this year with Osprey Tech Acquisition Corp being behind that. And I got like 50 warrants for that one. And as far as the price, so you can see right here on the Friday, it was at $1.92. Average cost is at $2.08. And right now down $8.25. So in regards to all of this, I actually like how it's doing, and this is part of the reasons why I like doing warrants. As soon as when more news comes out in regards to when these companies go public and it gets closer to the merger, this is when we're going to start seeing a run up, and it's part of the reasons why I am not too concerned with the unrealized loss that I have right now, because I know definitely these will be in the money as it gets closer to that merger date, okay? So as far as orders, there hasn't been no orders. As far as for positions, you guys, we already covered that. As far as execution, so I didn't do any executions on Friday, so that's part of the reasons why you're seeing this right here. And if we take a look at the balances, so we could take a look, we could see for cash, we're at $450 USD. If we take a look at the market value, so that's taking into consideration as far as the equity, so the stocks positions, overall it's around $374.12. So total equity is both of these that they're both pretty much combining, and that gives us $824, and I have $472 for my maintenance access because this is a margin account. And then of course with that I get buying power, which is around 1,500 as well. So another thing that I want to show you guys overall in general, we can see this is the asset allocation of the portfolio so far. So when you take a look at it, it's showing you a cash balance that's in Canadian. So if you're wondering why you're seeing 566.32, that's in Canadian dollars. So you can see warrants are taking up a good portion of the overall portfolio, and this is part of the reasons why you want to have diversity, right? So that's why I said, aside from adding maybe some more warrants for ACIC, if it ends up getting even lower, and I'm looking at getting them below $2 if I do decide to add, then I'm pretty much going to be capping it there, and then we're going to be focusing on doing some stocks and then doing some options as well, since we still have a good amount of cash on hand that is available. All right, so we're going to be doing a technical analysis for APTO, so Aptos Biosciences. As you can see here, back on March the 23rd, it had a price of $3.63. When I did the video on it telling you guys that it's a great buying opportunity, it was at $3.62, so not that far off at all. So as you can see, it went on quite the run for this past week that we just got over, reaching a high of $7.20. So that definitely was an area of resistance. If we take take a look at the next level of resistance, we have here at $6.75, and then getting down to resistance area that you can see clearly here at around $6.09. So that's definitely an area to see where APTOs can actually get through it. Whether that's going to be happening next week or over a period of time, I could definitely see this happening, and this is just the beginning. So to kind of show you guys what ended up happening was, I was telling you anytime it gets a news catalyst and so forth, this stock is going to pop, right? So that's exactly what you see here. In regards to APTO, despite the fact that it ran up to $7.20, and yes, it has pulled back a bit, there's still some more room for upside, and we're going to go over that again very quickly here. So we could see it, all right? So currently, right now, it's at $5.91. But if we take a look at the analyst ratings, here's where it is. So based on 8 analysts, 25% say it's still a strong buy, 75% say it's a buy, 0 say hold, 0 say underperform, and 0 say sell. So the price target on the low is $9. So keep in mind the current price is still $5.91 here, right? The average is $11.11, and the high is $14. So there's still some more room for this stock to move. So if you're considering to get into a position, you know I got to put in the disclaimer. I'm not a financial advisor, and this isn't financial advice. Just know when you do invest, you're doing it at your own risk. When I first told you guys about this stock, and you know what? Not many people on YouTube even really knew about this. This stock was at $3.62. So you could have almost doubled your money in that time period up until now. But one thing that I want to also tell you guys, when it comes to biotech stocks, it requires a big amount of patience and also making sure that you have a stop loss in place. It's very easy for these type of stocks to actually lose 50-60% of their gains on some sort of bad news. But one thing that you need to realize, as long as you have a trailing stop or so forth, you'll be able to protect your profits and also protect your position and also minimize the risk in regards to the trade that you're making. So when I was in this stock for quite some time, I already knew, hey, here's where my stop loss is, because I literally had it set at $3. It was like, you know what? I don't mind losing 65 cents a share if things go wrong. So that's what I wanted to kind of tell you guys. When you're playing the biotech stocks, you got to make sure that you're patient, and you also got to make sure you have your stop loss in place just in case things go bad. And for my final thoughts for the 5K challenge, I'm very happy with those positions, and I know those warrants will go up a lot. Like I said, I'm looking for a return within the next 2 to 3 months. And like I said, I'm not taking anything less than 50% on those particular plays. And the reason why I have this much high conviction, as they get closer to the merger date, they are going to have run-ups, and that's what we're trying to take advantage of. So that's part of the reasons why, since I'm down a little bit right now, it really does not concern me at all. Hope you guys found this video helpful. Talk soon.